Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Okay, so first up, let's take a look at LBIX. Okay, so yeah, this was a nice follow through today. It had formed bullish Harami reversal pattern yesterday, following 5 red candles in a row, and so it was had this big pullback. It had closed above the upper Bollinger Band here on the 16th, and the candles worked their way back into the bands. It on its way back in, it failed to hold support. It came all the way down. It broke through the 200 and 300-day simple moving averages and the middle Bollinger Band, and then finally it found support down here at the gold line, the 100-day simple moving average at 138. The lower wick on the candle on the 31st almost hit the 50-day simple moving average down here at 126. So this support zone was solid and held, and then today there was nice follow through. Notice the close today was back above the 200 and 300-day simple moving averages and the middle Bollinger Band. So the key now is to hold those levels and then continue this uptrend that had started back here when there was a close above the middle Bollinger Band on October 10th. Okay, so if it breaks back down and it closes below these 3 levels, that would signal downside risk. If it holds, the key level to break on the upside is this 230 zone, which is the high close here. If it can get above that, then you're looking at the upper Bollinger Band at 283 and the closing price here on the 16th. So it's 230 and the 280, 283 resistance zones are the next 2 key levels to break above. As long as that middle Bollinger Band holds, the uptrend should continue. Notice there was a big volume spike today, so good volume behind the move. MACD is pinched and hooking up here, so you want to see a crossover on both time frames. Okay, so let's take a look at LINU. Okay, so it is in the bull zone here on RSI. It's back above 50. You had a crossover here in Fasto. And so this is similar to LBIX from yesterday. Notice that it had multiple red candles in a row. It had formed 6 red candles in a row, and then today bullish 1 white soldier reversal pattern has formed. And so we'll be looking for bullish reversal confirmation tomorrow. Notice just like the last chart, it had dropped below the middle Bollinger Band and the 200 and 300-day simple moving averages. Today it closed back above the 200 and 300-day simple moving averages and EMA 4. It's just below EMA 8, EMA 13 in the middle Bollinger Band. So it needs to close above all 3 levels to hold on to this uptrend that started back here on the break above the middle Bollinger Band. If it drops below the 50-day simple moving average, which it's currently holding here at 158, that will signal downside risk. It needs to hold this level. If it can close back above the middle Bollinger Band at 193, that should signal the uptrend is continuing. And then the key level to break is going to be the closing price right here at about 233, 234 or so. If you can get a close above that level, then that should signal it wants to break out higher. Yeah, so this is trying to get the uptrend going here. Keep it going. If we look here, we can draw a resistance line across the top of these candles, and so that's lining up with the it looks like with the upper Bollinger Band. So 250 will be a key level to break after this 235 resistance zone. Okay, so keep an eye on the volume. There was a little bit of a pickup in volume today. Bulls would like to see a volume spike. Okay, take a look at MARA. Okay, so this stock has been trading in basically a sideways channel for the last couple of months. As you can see here in September, it came up and it hit up here at $2 in September, and then it pulled back, hit this 130 to 140 support zone, came back up, tested that $2 zone. Then it came back down here, retested this 130, 140 zone, the bottom of the channel, and now it's back up at the top of the channel again. So is it going to bust through the top of the channel and head higher, or is it going to pull back and retest the bottom of the channel? So it's all going to depend on breaking high close horizontal resistance. And so some key levels to break here are the closing price here on September 26th. If it can break that at 190, and then the real big level to break is is up here at just about 205 here on the 27th of September. A close above that level, if it can close above 204, 205, that should signal it wants to run higher. If it fails to break resistance here, that could signal more consolidation. Notice it is holding the 50-day simple moving average, the 100-day simple moving average, and the middle Bollinger Band. So it's really trying hard here to get something going. It looks like this is a consolidation and loading pattern. You can see that there's bigger volume spikes on the up days. So yeah, so keep an eye out for a breakout. If you look here, we've got the 200-day simple moving average at 259. So that will be the next simple moving average resistance level to break if support holds here. Okay, so take a look at ICON. This is a dead cat bounce play. It had a big gap down open back here and had a big drop on the 30th. And what happened is it pulled all the way back below the lower Bollinger Band. Notice how the candle yesterday was well below the lower Bollinger Band. Here's the lower Bollinger Band up here. And so the candles are working their way back into the bands. And so keep in mind the lower Bollinger Band and EMA4 are coming down fast, but those are going to be the first levels to break. It's going to be EMA4 at 256, which is the big resistance level. Many times when you get a dead cat bounce play where the candles are well below the lower Bollinger Band, they work their way up to EMA4 and then they hit resistance and continue heading lower. If it closes above EMA4, then it could work its way back up to the top of the gap or the bottom of the gap level. There's a gap up here between the top of this candle and the bottom of this candle. So the top of the gap is up here around 415 or so. That's a big move from where it's at right now. Right now, the big level is EMA4 at 256. Okay, so when you're playing a dead cat bounce play, the best way to trade is off the intraday charts. And if you look here yesterday, this is the 15-minute chart, a 3-day chart. Notice how tight the Bollinger Bands were yesterday. So they were super tight, and then there was a nice break above the middle Bollinger Band. The candle started riding EMA4, and then they broke above the 50 simple moving average, which is the green line. So ICON is currently in play as long as it can hold this middle Bollinger Band and the 50 simple moving average. If it drops below this green line, then that's going to signal more downside risk. If both these levels hold, then you could potentially see a move back up to the 100 simple moving average at 278. So the key level to break is going to be right here, the high close for today, which is basically at about 210 or so. That's this candle right here at what is that? 1130. The 1130 candle right here. Okay, so yeah, if it can get above 210, then that could signal that it wants to run up to that 100 simple moving average. If you do see a drop below 190 support zone, that was the bottom of the channel intraday, that would signal downside risk. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.